Today I have with us Doug Murphy with Baltimore Life. He's the VP of Baltimore Life. He's going to be going over some single premium life insurance sales ideas for both cash and qualified funds. Doug, are you there?
I am, Kathy. Thank you.
Awesome. Take it away.
All right. Thank you very much for your time this morning. I'm not going to take up too much of your time because I know it's first part of the week, but I'd like to talk to you a little bit about our single premium products. We have two. We have one that's designed to take qualified funds called Generation Legacy. It's one of only a few products in the country that's set up with one application in order to do that on a simplified issue basis. And the other is our simplified issue single pay whole life, just a regular single pay whole life product. I'm going to talk to you briefly about both of those. We're not going to get into product specifics much today. We don't have the time to do that. I would encourage you, if you have questions around product specifics, that you get in touch with Kathy or somebody else at the staff there at Premier to get that information. I always like to start out with some LIMRA statistics. LIMRA is the Life Insurance Marketing and Research Association that insurance companies use for a lot of their statistics. They gather statistics on our industry and provide those out to carriers to use in product development, marketing approaches, and things like that. Some time ago, it's been within the last few years, and it obviously changes, so don't hold me to the exact number now, but I know a couple of years ago that LIMRA said that 94% of people who have annuities never annuitize. Now, I got in the insurance business in 1984 as an agent, and I learned that early on that life insurance could create an estate. I could take $25 and create an estate for somebody that didn't have one. However, an annuity was used to liquidate an estate. However, at today's time, the vast majority of people with annuities aren't using those products for what they're designed for, which is liquidation and to live off of in their retirement. We all know that that's a hard number, hard for somebody to classify because people, they move annuities around from one company to the next. It's hard to know exactly what you're doing with it. But I think the idea is still pretty telling that there's a large amount of people out there with annuity money, qualified funds, non-qualified annuities that have no intentions of living off of it. And I'll get into some examples of that in a few minutes. The other side is cash funds, simply money in CDs, money in 1035 exchanges from other insurance policies, money in bank accounts, money even under a mattress. That fund is best used to go into our single premium whole life. All we're doing is taking cash assets and putting it into a single premium whole life product. There's no 1035 exchange needed, nothing else. We're just moving cash into cash and moving on. What you're doing there is taking, somebody may have $10,000 in a CD that they're using to, let's just say $10,000 they're wanting to use to fund a final expense type plan. They don't want to go out and pre-fund, but they want to put $10,000 away to pay for their final expenses. You could utilize single premium in that idea and take 7 of it or 5 of it based on their age and buy a single premium whole life for $10,000 and save them $2,000 or $3,000 in cash with an example like that. So that's an idea on how you would use a cash asset to purchase life insurance and do it on a single premium basis. Some of the other things I want to talk about today is just ideas that you can use quickly to find this kind of money. Some of you out there already know, if you're working in the annuity market, you know where to find this money. There's people out there with these types of funds. You just got to get a habit of asking about them, which leads me to my first point. People that have been very successful with us, we've had groups that have been very successful with us by simply asking clients, whether they're Medicare sub-clients, they're final expense clients, they're some other type, they're annuity clients. Tell me about, do you have leave behind money? And you may know the direction I'm heading with that, but for a typical client, they're going to know what you mean by leave behind money, which is going to have them ask, I'm not sure what you mean by leave behind money. So now I don't have a yes or no answer typically. I've got a question that I get to answer. I get to tell them what I mean by leave behind money. And if I was talking to you, Kathy, I would say, well, Kathy, that's money that you've got set aside that you're not planning to use, planning to live off of, but you just got to set aside in the case of a rainy day that you need it for some type of long-term care expense, or that you're just going to leave it to your heirs, your kids, your grandkids, maybe a church or a charity or something. That's what I mean by leave behind money. Mr. and Ms. Client, do you have any of those types of funds? If they say they don't, then move on. You don't have a single premium or generation type sale, generation legacy type sale. but you've asked the question. You pose it in a way that you get to explain that. They may say, well, I've got some, but I don't have much. All I've got's $5,000. Or they may say, I don't have much. All I've got's $105,000. What's a lot to somebody is varies by person to person. So don't prejudge their pocketbook. $5,000 is our minimum premium. We have some maximum premium, but they're fairly high based on a simplified issue basis. And Kathy and her staff there can help you determine whether or not your client would qualify for, based on the amount of single premium funds that they have, whether or not they qualify for our products or not. So ask your clients if they've got leave behind money. Was there a question there?
Oh, I was just going to say, on your brochures that you have for the agent guides on both
Yes.
products to qualify is very helpful, very user-friendly on those, because everything's pretty much listed down there if they're going to qualify or not. So
right, and I appreciate that, Kathy. And anytime during this, you make sure you let me know if there's things that I'm missing, because you know our products very, very well, and I appreciate your input on that. But you're exactly right. It's a great place to find that. The second thing I'd like to talk about is, I mentioned it just early on, annuities not needed for daily living expenses. You got so many clients out there today that have those annuities that they're not planning on living off of. In fact, I would tell you that if you have clients that have annuities, whether they're annuities that you sold or annuities that you may not be in the annuity business, you may not sell annuities, but you have clients that have annuities they brought to other places that are above the age of 70 or 70 and a half, and they're not living off of those annuities now, the likelihood of them living off those annuities are very, very unlikely, according to LIMRA. So that's a great place to start looking. Any of your clients that have annuities that's over the age of 70, if all they're planning on doing is leaving those funds to their heirs, why not take some of that qualified funds or the non-qualified annuities and move that into life insurance tax efficiently? Our Generation Legacy, I said, is one of very few products designed to do that with one application. The application process is very clean. It's a simplified app, minimal amount of health questions. The client's not going to go through APSs or parameds, that type of thing. You take the app in the client's home, you call our underwriting call center from the client's home. There's about an 8, 9, 10-minute call. The underwriter's going to go through the health questions only. And at the end of that call, right now, our approval rate on the phone is a little over 91% approval on the phone for those clients. So when you leave that client's house, you're going to know that they're medically approved. There's no more underwriting to go into that. So it's a great opportunity for you, especially if you sell annuities. The last thing you want to do is to have a client be willing to give you a large sum of money and then be looking to put that into life insurance. Last thing we want to do is to make you come spend a couple of weeks wondering whether or not we're going to approve it medically or not, and then be able to tell you that we don't, and then you got to try to get back with that client to sell them something else. That's a difficult thing to do. We try to eliminate that possibility, if at all, if we can at all. So that's what we're trying to do there. So our Generation Legacy is specifically designed to do that. I said there's very few carriers that have that type of product. We're the only one that I'm aware of right now that pays both the death benefit of the life policy, which is usually as higher than any of our competitors out there, along with the remaining part of the SPIA if that client dies within the payout period. So without getting into too much detail, and Kathy, you can feel free to call Kathy and her staff back if you've got questions that I don't get to answer here, but that process involves really taking money out of an annuity and the client's got someplace else, moving it into our SPIA products with an annuity to annuity exchange, so there's no tax ramifications off of that. And then we would liquidate our SPIA over a 10-year period to pay into a short pay life product. So let's say it's a 10-year period, we would take that SPIA and liquidate it over a 10-year period, minimizing the tax the client pays to an annual basis as opposed to one lump sum up front. And then we would have, at the end of that period of time, we would have a fully paid up 10-pay life product. The client would no longer have to pay into, fully paid up for the death benefit, and we've liquidated that SPIA very systematically and efficiently for that client, minimizing the taxes as best we can. So it's a great product that your clients have probably never seen, never been aware of out there. It's a great opportunity for you to talk to them, whether you sold the annuity or someone else did and your client simply has that. I always use the example for my next idea on where to find it. My grandfather passed away many, many years ago, and I was not aware of single premium at the time, but I wish I was. He died in early 1990s, and when he died, I had the opportunity, because I was in the insurance business, to go through and handle all of his insurance paperwork. And I say all of it because at his age, back in those days, and you still have clients today that are, you know, in their 70s, early 80s, that they have a lot of policies. They bought policies when they were younger. Their parents probably bought whole life policies on them when they were kids. In his case, he had 14 policies, starting out as low as a $250 face amount all the way up to a $2,500 face amount that he had bought throughout his life. And back in the 40s and 50s, those weren't small policies. They were relatively average-sized policies. But all these policies were still in force. They were paid up. He had about a little over $11,000 in cash value in those $14,000 in death benefit. If you got clients like that or similar to that, ask to look at some of their old policies. Some of their cash value out there is enough to where they could buy on today's rates of life insurance. They could buy a lot more than they bought back in the 40s and 50s. And what you would be doing, all you're doing there is exchanging fully paid up policy for a fully paid up policy. So look at taking that cash value. In his example, I said there was a little over $11,000. And if that was the case back in the 90s and he was alive today and I could do that, we could have probably taken that and bought $15,000, $16,000, $17,000 and paid up insurance immediately utilizing that. You've got clients in a lot of situations like that. Never fail to ask to look at some of their old paid up policies. It'll give you a good idea on what kind of insurance benefits they have and what they need as well. The third one I like a lot, because I don't know how many of you out there started in the insurance business a long time ago, but I've been in the insurance business just over 30 years. I started August 27th, 1984, so I'm about 30 and a half years into the insurance business. And in the 1980s, mid-1980s, we sold a lot of universal life. And we sold a lot of universal life with extremely high interest rates, because our interest rate environment back then was high. We were illustrating universal life at 13, 14, even up in the 15% range at times. And what happened in the 80s, and sometime up into the early 90s, the cash value on those policies continued to rise and continued to rise and looked extremely well. But sometime after that, the interest rates obviously started to go back down. And what was happening was that these policies, because the interest rate was initially high, the premiums weren't sufficient to pay the amount of premium that was needed to fund those policies appropriately. So there's so many policies out there right now, universal life, that were written in the 80s, early 90s, that are in need of what I call a rescue. And whether or not you sell universal life or you don't really isn't important. What's important is ask your clients, even your older age clients, if they own a universal life policy. They may not know it by name. A lot of them do, but they may not know it by name. Ask them if they get an annual statement every year from their insurance company. Every company that sells a universal life is required to send an annual statement every year, and they're pretty simple to read. If you turn it over on the back, typically on the second page, there's going to be a ledger there, and on the right-hand side, it's going to tell you the starting account value or cash value, and at the bottom of it, after it's going to go through every month there for 12 months, it's going to tell you the end of that cash value. And again, the people there at Premier can help you to read these if you're unfamiliar with how to read them. But if that amount of money is going down, that means that eventually their premiums are either going to have to go up just to keep the policy in force, or they have to die before that cash value runs out, or the policy will go away. There's going to be a number of things that happen to that. If you've got clients with universal life, be sure to ask them to look at those ledgers. Give Premier a call, get the information off of it as best you can, and then you can go back out and talk to these clients intelligently about what they need to do with these policies. But we found so many of them that was written in the 80s, early 90s that need a rescue. Take what may be, you may have a client out there with $25,000 of cash value in a $100,000 UL, and every year that's dropping $2,500. So that client probably knows that they've got some issues, that cash value is going down. They just don't know what to do about it. You can take that $25,000. You're not going to buy $100,000 in death benefit like the UL, but you're going to give that client some peace of mind by taking that $25,000 and perhaps buying $50,000 based on their age by simply 1035 exchanging the cash value of the UL into the simplified issue single pay whole life product. It's a great concept. We have agents that use that concept and look for those types of policies quite often. The client's peace of mind is that they don't have to worry about the policy running out in 10 or 11 years. They don't have to worry about increasing their premium at some point in time to a point where they can't afford it, or reducing their benefits down to the point that they can't keep it either. So that's a great place to look as well. Another area to look, as I mentioned earlier, is burial accounts, burial insurance, final expense. If you're an agent that sells final expense, you got so many clients out there. And I go back to another personal example. My parents had two $10,000 $10,000 CDs that they had set aside to basically pay their funeral off in the event that they died, which is a noble thing to do. But I was simply able to take about $6,000 from my mom, about $7,000 from my dad, and purchase the $10,000 single pay policy on both of those, and save them in total about $7,000 in cash that they could use to do something else, whether that was put into an annuity or put into some other type of investment, or just to spend as they chose to do. But that's an idea of taking smaller face amounts. Somebody's got at least $5,000 they've got set aside in cash to use for a burial account or final expenses. And there's people out there like that. Don't overlook it. You're going to tell me if you sell final expenses, there's not a lot of those people, but there's more maybe just outside on the upper side of the final expense market that are doing exactly those types of things. You got so many people that's pre-funding funerals that are using large sums of money to do that. And in my belief, this is a better option to do that, because you're not tying yourself to any one funeral home when you do that. You know, these products don't have long-term care benefits, and I want to reiterate that. Nothing that we sell has long-term care benefits in it. It requires a different, we have to file products differently. What our products have are what we call accelerated death benefit riders. We're not going to pay, as most long-term care products pay, a monthly benefit. We're not going to pay a monthly benefit if they have an acceleration of death benefit. What we're going to do is take the death benefit. If they have if they need one an acceleration based off of they have less than 12 months to live, they've been diagnosed as not being able to do more than 2 of the 6 activities of daily living, that they're going to go into a nursing home, or they're going to need home health care, adult daycare, or something like that. If they can't do more than 2 of the 6 activities of daily living that we often refer to on the long-term care side, then they can qualify for our accelerated death benefit rider. And this is extremely important for those people that have money set aside. The only reason they're keeping it and they don't want to do much with it is they're afraid they may need it to go into a nursing home, or to be taken care of in the event they have some type of illness that require assisted living. So we have accelerated death benefit riders. If you've got a client that's on the fence about whether they need money to pay for you know, certain types of assisted living expenses, or they want to buy, they know they need life insurance as well, and they're sitting on the fence and not really doing anything, this may be a great option for them, utilizing our accelerated death benefit features that can cover them in the event that they have those types of needs. We'll pay out a percent of the lump sum, up to 95% on our single premium whole life for terminal illness, and up to 85%, I think it is, Kathy, correct me if I'm right, 85% for going into a nursing home, and 80% for adult daycare, you know, that type of thing. So it's a great option for that client that has those types of concerns. You know, you can use this type of policy in business types of settings. I'm not going to get into that today. You can use that for certain types of, certain types of tax situations, businesses where you use, where somebody wants to give a business owner a bonus, and you can bonus money into these types of products. It helps them from a taxation standpoint, but you can use those in those types of things. I'm not going to get into that. We don't sell a lot in that environment, but if it's a market for you, give Kathy and her group a call, and they can walk you through exactly how to sell it in that type of situation as well too. Kathy, I've taken up about my 20 minutes here that I told you I would take up. I'd be glad to entertain any questions that you might have about sales ideas, products, or anything else that the group might have.
Hey, Doug, thanks a lot. I do have a couple questions here for you, just to make sure that everyone's understanding this. That you're talking about the CD money on the single pay product.
Yes.
Do you have an idea, like roughly your average sale, first of all, to kind of explain that to your client, to the agents, so they know what to look for?
Our average, and it's hard to get, every time a company gets into average, we have a fair amount of clients that give us less than $10,000. Our average premium is on a single premium whole life is about $36,000, just under $36,000. And obviously you have some larger face amounts. That's premium-wise. That's not face amount. That's premium-wise. So and our average single premium case is just north of $60,000, which is about right in range with what the average annuity case is, if I'm not mistaken. So it's they're fairly big cases, but what throws those averages off sometimes, Kathy, is some of the larger premiums, the $500,000 premium that we get here or there. And if you took a per case basis, the average case basis is going to be somewhat smaller in both cases there.
Okay. And then again, I know you were talking about this with as a sales idea, but I've had a lot of agents talk to me about this, and I just kind of want to make sure everybody understood that. If you had a $10,000 CD, and a lot of people tell their agents, well, this is for my funeral, but how much money you can actually save them by saying, okay, let's figure out, do you want to use $10,000? Let's figure out a $10,000 death benefit and what it would actually take to pay that. They can take the rest of the money that they need, depends on the client's age, and use that for income or daily living, or they can use it for a trip or something else that they have in mind.
Right.
So,
exactly right.
A lot of agents do ask me about that. We can solve the reverse, which is nice on the software. Your website, by the way, is probably one of my favorite websites to use because you have everything set out there for agents to use. Specifically, here's the single pay product, here's the generational legacy product. You break it down with all the sales ideas, the marketing pieces, letters that they can use to send out to their clients. I just love that. So agents can find everything so user-friendly out there. Plus the application, the software is very, very easy to use and find. So I just want to make that up, let you know about that. I do have a couple other questions that are coming in. Will a single pay policy always result in a MEC?
Our single premium whole life with us and with any other company will automatically result in a modified endowment contract. That's correct. On our generation legacy, because it is either over a 7-pay period or a 10-pay period based on their age, will not typically result in that, Kathy.
Okay. Okay, that's good to know. That was one of the agents asking that. And then can you give us the web address for Baltimore Life?
It's www.baltlife.com. Now, to get to their website you were mentioning there, they will need a login and password. If they've got questions about that, they can call our agent services number. And for the life of me, I don't have that number in front of me here, but there's a toll-free number that we have specifically set up for agent services to where agents can call in with comp questions, pending questions. It's designed to set up to answer most of their questions without the agent being transferred around to a number of different locations. But if they don't have a password, they can call in and get that. We can get that to them. It should have been sent with them in their initial letter, contract letter with Baltimore Life on how to initially log into the website. But as you said, behind that, we're going to have recordings of webinars that we do. We're going to have 24-hour on-demand training. We're going to have just about everything, brochures, PDFs of client pieces, and everything else that an agent's going to need out there in order to work in this market that's out there. So it's a great opportunity. I would say too that we don't expect that this is going to be your primary market. Most agents that I'm talking to, and I don't know the makeup of all the people that's on this call, but most agents out there, they're in a different market, and single premium is something that they come up on as, if you sold one of these a month or one a quarter, this, from a commission standpoint and that kind of thing, these cases are examples of ways that you can double your income just by writing one a month or one a quarter based on your other production. They're outstanding cases. You're doing what's right for the client. You're doing what's right for you, and it's a great product for us as well too. And we think we're a leader in this market based on the simplified issue nature. We're not out there trying to chase the millions and $2 million and $5 million premium cases. We're really doing this on a simplified issue basis, and we think we do it very, very well all across the board.
I have another question here. For everybody, I just put out Baltimore Life's webinar, so everybody can read that. Otherwise, we'll be calling everybody and talking to you and making sure you have the website address. Another question, are both products available in all markets?
You're going to catch me there. All of our products, both of our single premium products, SPWL and GenLeg, are approved in all states except New York. We do not market either one of our products in the state of Kentucky. There's a number of things that goes in that. One is the premium tax has to be paid differently by state, by county. There's 120 counties in Kentucky. It's difficult for us to do that. We're not sure how other companies do it, but we're not doing that. Plus, there's a replacement guideline in Kentucky that we don't like that keeps us from writing our single premium products there. There are some variations. On our website, again, Kathy, is a state approval, and I don't have that state approval pulled up in front of me. I'm looking at your at the screen here that we're looking off of. But on our state approval, it's just going to tell you what states have the products approved in. The product approval is really not the biggest issue. We're approved in almost all of the states. Again, as I said, except for New York, and we don't write business in Kentucky. Look at the state approval guide again, because some of our riders, like the ADVR, may not be approved in various states because the departments of insurance there, for some reason, don't like accelerated death benefit types of riders for whatever reason. So I'd encourage you to look at that. I can't go through them all here because if I did, I'm sure I would miss it or get one of them wrong.
Okay, no, that's fine. I'll make sure to double check and get that back to the right person that's asking the question. And I have another question again. These are popping up as we're talking. So
sure.
Can you explain Baltimore Life's rating? I mean, you're a great company. You're probably one of the most solidest companies that we have, that we work with. But explain your rating so everybody can understand that, please.
Sure. Baltimore Life, from an AM Best standpoint, is rated B++, just below the A category. We meet with AM Best, and I'm going to explain this to you as best I can. It's just in layman's terms. We have been a B. We were at one time, if I'm not mistaken, prior to me joining Baltimore Life back in the early part of the century, we were a B company. We went to a B+, and we've been a B++, I think, for at least the last 7 years. And it's one of those things. It's always a moving target. We meet with AM Best every year. They either come into our office or we go to their office. They tell us what they want us to do, what they think we should do to go to get an increase in the rating or a positive outlook or something like that. And we do those things. In most all cases, we do those things, and it comes back, and they send us that congratulatory letter about 30 days after they've met with us. Says, congratulations, we've reaffirmed your B++ rating. So it's one of those things you really don't know what goes into it. I always look to say in a simplified issue market, it's really not to us a big deal. We run across it. Usually it's always the question's always asked by an agent, very seldom if ever by a client, because it's a simplified issue basis. On a simplified issue basis, our final expense or our simplified issue products, single premium products, it's not really ever a big deal. Obviously, to the agent, it is. If you were to look at our financials, and I'm not going to get into it because, again, you can go online, even at the client website, and look at our financials on a quarterly basis. Our financials, in a lot of cases, our risk-based capital and other things, are the same level have been the same level for a number of years that you would find a A++ company to be at. Some of the things I think hurt us, in my opinion, are our asset size. We've just exceeded $1 billion in assets at the end of last year, and that's a big deal to AM Best. We don't know. They don't tell you, here's the things you've got to do in order to get to A or an A+ or an A++. It's kind of a moving target, so you don't really know what those are. You do the best that you can to do that. One of the things they asked us a number of years ago was to get diversification in our product portfolio. We were primarily final expense. We did diversify into single premium, obviously. We diversified into some simplified issue term products, and we diversified some into workplace. So we have diversified there at their suggestion. Our financials on risk-based capital and those types of things are very good based on what an A++ company would be. So, and our company is managed extremely well. Our CEO is a former accountant, and with one of the major accounting firms in the country. Used to be an auditor on insurance companies. So our background in that, and we monitor. I've worked for big companies and I've worked for small companies, and I would tell you it seems like the smaller companies are better managed from a financial standpoint than the larger companies are, simply because we watch every dollar. And that may or may not be satisfactory to what people out there are wanting to hear, but that's the story as I know it. And I'm sometimes involved in the AM Best discussions, but not always. But that's typically how they go.
True. Every time I've talked to any agent about your ratings, you guys are solid. You've been around for what, over 150 years?
Almost 140, about 135 years. So I think we celebrated 130 years a few years ago, and I'm not sure how many years ago that was, but I know it's right around 135 years.
Okay. Another question popped up. Does the web page have a rate calculator for the single premium whole life? That you guys do have a wonderful software system to use. Plus, your rate guides are actually in the back of some of the brochures, correct?
Yeah, that's correct. And we do have the rate guide out there. You can actually download too, and if you guys don't have it, Kathy, I'm not sure if you have it. If not, I apologize. But we actually have a rate calculator that's an app for Baltimore Life out there for our products. You can use it on. I have a copy of it on my iPad and my iPhone. So if you've got a device like that, you can actually go out there, and all it is, it's really an Excel spreadsheet that we've, for lack of a better term, kind of fancied up. You can put the client's age, sex, amount of premium, and it'll give you the face amounts of the policy that you can write out there based off that.
Wonderful. Well, I tell you what, Doug,
I can get that for you.
Oh, that's great. I think I have that, but I'll make sure that the agents that are asking these get that information back.
Sure.
I do want to thank you for your time on the webinar with us this morning, our Life Weekly. We do have, every Monday at 10 a.m., we will have another Life Weekly event coming up. I believe next week is a surety on the line. But Doug, in case somebody needs to get a hold of you to ask any questions, what is your phone number? Or what is the best way
I travel. I've already been on almost 60 airplanes this year. The best person to call in the home office for me is either agent services number that we have, or you can call Rosemarie Bernarding. And Rosemarie's just one person, so I would, call the agent services number first. But Rosemarie works for me, and she's much easier to get in touch with. I leave this afternoon to get on a plane, and I don't get back till Saturday. So it's that's the kind of travel schedule I have. But her extension is 410-581-6637. Her name is Rosemarie Bernarding, and she works for me and does most of the legwork. I have an office in the home office, but I'm out traveling. I actually live in Tennessee, so I travel and outside of the home office all the time. If you have questions that involve internally there, she's a much better person to get in touch with and a resource than I may be.
Wonderful. Otherwise, if you guys need to reach us, you can also call one of the life marketers at Premier at 1-800-365-8208. Just ask for a life marketer, and we'll be calling. There's been a few people who've asked us to reach out and call you right away, so we'll go ahead and do that as well. Okay. Thanks, everybody. Have a great day. Thanks for your time.
Thank you for your time, Kathy.
Appreciate your time.
All right. Goodbye.
Bye.